What is going on, everyone? Welcome back to another video, and I've had a bunch of comments on this one, so let's go on ahead. You guys see the title. Let's get into TSLY, and is this a dividend trap? Is it something I would invest in? Let's get right into it. Okay, guys, first thing first, you guys know that there are a ton of dividend traps out there. I've reviewed a bunch of monthly dividend stocks. I've reviewed a bunch of dividend stocks in general. You guys know monthly dividend stocks are my favorite. So where does this fit in? In the monthly dividend stock. So we're going to show the dividends here. This is TradingView. Just so everybody knows, it shows the dividends here. I've used a couple of other platforms to look at these, but this one just seems to be pretty simple, and it's free. Again, keyword, this one is free to use on the web base, just so everybody's aware. But I want to look into this and what they actually do. So not only does a company have to make money and return money to their shareholders, which is something like me and you are going to receive on those monthly dividends, but we want to know how and why exactly is my big thing. So how does the company make money? Because this is just a fund, pretty much, guys. You got to remember that this is just a fund. This is not a business where they are providing a service to somebody other than us investors. They are taking Tesla, which everybody loves, Elon Musk, blah 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 blah. And if you're a big Elon Musk or a Tesla fan, that's awesome. You've probably been so deep into this stock right now, you're trying to figure out what's happening. So the one key takeaway I always like to look at stocks when looking at the overall picture is, first off, it's not proven. When I say that is, it hasn't been incepted or around long enough to say, hey, this is going to work out really long term wise. So that's a big factor there. Then the second one we go into is the trend of the stock. So there are other monthly dividend stocks out there that I think you can get, not just return-wise, but I think you can get a more safe dividend, a more safe bet, a more safe appreciation over time. You guys know I'm a big advocate of the wheel strategy. I love selling options. Guys, I've looked at the options chain on this one. You're not going to be able to sell options. Me, on a dividend stock, I would love to be able to sell options and be able to get into it at a cheaper price. And if I didn't get into it, I'm collecting income still. The worst case scenario is I'm still making money. Those are the best case scenarios for everybody. So how does TSLY make money? Well, let's go to Tesla because I'm going to show you exactly what they do and how you can do it on your own if you want. So Tesla options, and we are going to go. Let's go basically I've got a feeling let's go 6 months out because I'm going to show you how to do it this way. 180 days, 181 days. They do this a little bit differently, just so you guys know. They don't do these exact dates, but I think this is pretty important. So we're going to buy. Where did my median price go? I must have screwed this up. I do apologize. So we're going to flip this back. So here's our median price, 181 days. So it's at 253.33. So I'm gonna say 250 is what we're going to do. We are going to buy a call. I know you guys don't hear me say that very often. We are going to actually buy options in order for this strategy to work and to see exactly what TSLY is doing in this fund. And then remember that 250 number. We are going to go to a put. And we're actually going to buy the 250. Hold on. Yeah, it's 250. Where is the 250? There's the 250 put. So you guys can see already right now we're in this at $6,000. Actually more. $6,700, almost $6,800 if we're rounding up. But here is the game changer. So you see right now it's a long straddle. So then what they are going to do is they are going to go way back up here, probably to about 30 days or weeklies. Again, but this is the exact strategy that they are using. You guys can do this in your own portfolio. We are going to click sell and call. So they say that they're about 5% out of the money. So you guys have to bear with. You are paying a fund manager to hand pick these options. is the biggest thing on here that you guys have to remember on this one. So, maybe they are, say they want to go 20 days out, they want to be a little bit. So, and then they're going to go 3 to 5%, I believe is what I was reading on their fund. So, we're going to go to a 270. We're going to make $20 per share, and we're going to collect $475. Now, this is the layout of what they are doing. They are doing what is called a synthetic covered call. You could also do something called a poor man's covered call, but that's not the strategy they are using. They are using a synthetic covered call, meaning they never actually own the shares. They do, however, though, own treasuries if you go into their breakdown. So this is what it looks like. The cost is actually going to be more on this one. You're going to pay on this one, but what's going to happen is it goes out, then you get to go do another one. So basically they're hoping that either it goes up into this and it works out really well and they get the appreciation, or this expires worthless and then they roll into another one. So that is the breakdown of this. Now, something I wanted to show people, and I think this is very important, is compare the underline, or the NAV is what you would be looking at. So the underline of this is Tesla, TSLA. Everybody in the world knows that brand now, Elon Musk, so on and so forth. But look at the line. TSLY is underperforming. It's underlining. Guys, this is supposed to make money and extra income and be invested into Tesla. They're not even sticking up with Tesla. Now, I'm not saying that they are going to, because I would rather see, and this is with shares reinvested. The dividends are reinvested into this one, into more shares. Of course, Tesla doesn't distribute dividends, but this is something that you guys need to be looking at, because this looks like a trap. If I'm looking at this on a chart on a P&L in one of my businesses, I'm going, well, what's Orange doing? We need to be doing what Orange is doing. You can't do that in this case scenario, but I don't like this. Once again, we're going to go back here. Guys, if you bought this at the inception and you thought this was just a fantastic idea, you're almost down 50%. Now, of course, that's if you didn't do anything with the dividends and stuff like that. Again, they're doing good dividends. You would have almost got $1 a month here at the beginning, it looks like. Then you just see that it gets less and less and less. Oh, there they peaked back up a little bit, and then less again. Guys, is this a stock that you want to hold forever? And I ask this question because on dividends, when I buy a dividend stock, I'm willing to hold it for a few years unless something absolutely crazy happens in the world and I'm ready to move on from it and cut my loss. TSLY, if I would have bought this at the inception, I would have probably already cut it and got rid of it because I would have been so upset at this. Now, is it a better buy at $12.03 at where we're at now? Absolutely, it's a way better buy. But is it something that I'm going and sticking 20, 50, 100 grand in of my own money that I have to create more income off of? No. Like, guys, this is a hard no. And I actually have watched a bunch of interviews with the manager of the Yield Max team here for TSLY, and I don't actually have a problem with what he's saying. And it does make sense. He's not a dumb person whatsoever. And they are strictly for income. You guys know I am an income investor, a big time. Everything I do is really for income, but there's got to be a level of safety with it. I think that this one is a trap personally. I don't think it'll be there forever. I've heard such rumors as as stock splits and things like that already on TSLY. I don't love it. Now, the one thing that they do have is options on here. You can sell them. And we will show you this, but here is the thing. They are very, very illiquid. So they are not liquid whatsoever. If I wanted to sell a put in order to get into this one, I could sell it at 11. I don't think you're actually... Now, you can see the price differences here. Maybe they've got a little bit more liquid since the last time I looked at them. But the last time I came into this stock and I was starting to do research on it, I didn't like it. You're only going to collect $10. You still have to buy it at $11. And are we certain that this is not going to fall back to $11 and even go underneath of it? because I'm not so certain that this one doesn't fall underneath of it unless they do a stock split or something of that kind. So with that being said, guys, thank you guys all for watching. Please, I am not a financial advisor. Make your own decisions on these. Know what you're investing into. If you can do it yourself, maybe without paying the fees, maybe it's a better opportunity for you guys. You have to do what's right for your life. I hope I see you guys in the next video. Thumbs up, subscribe.